Welcome to today's latest news. Here's a highlight of the day. Dollar gains years ease after Powell inflation comments. New York, June 29. Treasury yield eased for a record consecutive day and the dollar rose on Wednesday after Federal Reserve Chairman Jerome Powell said there is a risk that the U.S. central bank's interest rate hikes will slow the economy too much. The S&P 500 ended slightly lower and looked set to put in the worst first half of the U.S. benchmark index in more than 5 decades. The clock is kind of running on how long will you remain in a low inflation regime. The risk is that because of the monetary policy of shock that starts the transition into a higher inflation regime, and our job is to literally prevent that from happening, and we will prevent that from happening. Investors have worried that the aggressive push by the Fed to dampen inflation will tip the economy into recession. Mark Duckby, senior portfolio manager of Northwestern Mutual Wealth Management Company, said investors are waiting for Thursday data on the personal consumption expenditure (PCE) price index. A slowdown or a mild recession is almost consensus at this point as it relates to the economy. He said, "The question from here is how much does the Fed have to do to get inflation under control?" A Commerce Department report on Wednesday showed that the U.S. economy contracted slightly more than previously estimated in the first quarter as the trade deficit widened to a record high and resurgence in COVID-19 infection hurt spending. Treasury yield split as inflation worry haunted investors. The yield on 10-year Treasury notes fell 10.5 basis points to 3.102%, while 2-year yields slid 65 basis. Oil prices fell with an increase in U.S. gasoline and distillate inventory and worries over slower global economic growth overshadowing supply concern. Thank you for subscribing our channel. I see you in the next newsletter.